Good morning. This is the Brew, and it is the Friday edition, which means we have Paulina with us today. We are going to discuss the 3 best investing tips for beginners. So stay tuned for that episode. Good morning, ladies. How are you?
Hey, everyone.
Hi. Hello, Paulina, Molly. How are you guys doing today?
So good.
Awesome.
Doing great.
Hi, Paulina. Good. Another happy Friday for us. This is awesome. I love happy Fridays. Can't wait. So Paulina, the 3 best investing tips for beginners, huh? I like it.
Yeah,
Okay.
I think this is such an important topic, and it's not only good for beginner investors, but it's also good for seasoned investors to revisit their investing strategy, their goals. So I think it would be a great topic to review. And it kind of aligns with traders in a way too. Obviously, there's the short-term versus long-term perspective, but I feel like the principles are kind of similar.
Okay. All right. Well, you want to start right in, and we'll ask some questions as we go?
Sure.
Okay.
I'll start out with the first, and I think arguably one of the most important investing tips for beginners, and that is having clear investing goals. Having a clear investing goal, you can have more than one, by the way. You don't just have to have one goal, to invest for retirement. Having investing goals is similar to having a roadmap. It helps you know where you're headed and why you're headed there. So when you're just getting started, I think it's easy to get overwhelmed and possibly even make impulsive decisions, especially if you're a beginner and you're not really sure which decision you need to make. But goals act as your guiding North Star. They keep you on track and they help you make choices that align with your future aspirations. So to put it in a bit of context, kind of imagine you're setting out on a journey, you're going out on a vacation, but you don't have a plan, you don't have a destination in mind. How would you know which path to take? How would you know when you arrive? How are you going to navigate through your trip? I think you get the idea. Well, investing is very similar. Your goals give you purpose in your investments, whether it be saving for a home, funding your education, building wealth for retirement. Each goal requires an investing strategy. So this is why, first and foremost, having goals is absolutely imperative, because that guides your investing strategy.
Okay. That all makes sense. So investment goals then, depending on when you start, and I think we're going to be getting into that topic down the road here. They're different, right? So if you're an older person, you may have a different goal than if you're just starting out, right?
Correct. Because if you're older, that means you're closer to the age of retirement, and maybe your risk tolerance is less than a person who is just starting out in their investing journey in their early 20s, because it's all about, and again, I'm sure we'll go into this later, it's about time in the market. When you have more time to invest and you're a younger person, if there is a market event that causes you to have a lot of losses, you have time to recover. But if you're close to the age of retirement or are in the age of retirement, you don't have that luxury of time. If your investments lose because of a huge market downturn and you depend on that income to live off of from retirement, you're going to want to reduce some of those risky assets in your portfolio in order to make sure that you have a balanced portfolio that covers you when there's losses.
Got it. Okay. Mal, do you have an investment goal?
I do. I think diversification is always my go-to, and make sure you don't put all your eggs in one basket. And then I've always make sure that I have enough for myself and the people around me. So, think generationally. So I have nephews and parents, and always making sure that everyone will have a roof over their head for as long as I breathe. That's my goal.
That's good. So that requires a lot of money. I like this. I want to be part of your investment.
Yeah, shoot for the stars. You might just get to the moon.
I love it. Yeah, Paulina, mine was always make as much money as possible, I think, which doesn't sound like a good goal either, but I don't know. So are there any, I guess my issue is, I'm thinking of young people. I've got younger kids, and I always tell them the same thing. I said, listen, you got a long horizon. And you guys are, making some money. You could put this virtually away very tactfully and not really have to touch it again for practically 40 years, 30 years. So, their horizon's different, right? So for someone like myself, it's completely different from that. Hopefully I did all that when I was that age, but it's the kind of thing where if they do that and there's bad times in the market, you almost don't panic because it's just natural. You're going to go through bad times in the market, right? So you're going to have drawdowns and you're going to have great periods, and you just have to stick with the course, especially if you're Molly diversified.
Yeah, absolutely. I would even say when there are market downturns, sometimes, and actually most of the time, that's when there's most opportunity. That's when you can buy things at a discount, especially if you believe in certain assets, certain asset classes, stocks that you're really passionate about. You know that the underlying fundamentals of the business are strong, and you see that there's a major pullback in the stock. Maybe it could be a good time to accumulate more shares at a discount. So when there's a market downturn and you're saying don't panic, I totally agree with you, because it could be a chance for you to build up a position at a discount.
Yeah.
I think the neat thing to reconcile, with news, doom and gloom news that you might hear on a position, I'm talking probably more trading, but even investments, you always can reinforce those with your own personal research, whether it's a 10K or whether it's reading, the government's budget and growth of potential liabilities with baby boomers versus the new income coming in. Can we cover everything? So you can actually really do some sound research that can be the signal through the noise, which you get a lot of in the news. You can actually make your own decisions. So I'm a firm believer of that.
Yeah, good. Okay, so that's tip number one. Make sure you have an investment goal. Number two, what would you say number two is?
Number two, don't time the market. We hear this time and time again.
Here
and
we
for
go.
good reason. For
Put
good
me in the
reason.
penalty box. Put me in the penalty. I'm going to go sit in the corner now. Don't time the market. Okay, go ahead. I know I'm listening. Go ahead.
Listen, I think investors shouldn't time the market, because timing the market is like predicting the weather. It might work out sometimes, but mostly it's unpredictable because there's so much uncertainty.
Right.
So there are a few reasons why investors shouldn't time the market. And we've been talking about this a lot. Market volatility. Markets are highly volatile, especially on the short term. I know that's your bread and butter as a trader. But
Right.
for investors, when there's unpredictable events and you try to get in at a certain time, you might not be able to do that. Trying to figure that out is really difficult, especially for experienced investors. And that leads me to my second point as to why you shouldn't time the market, because you could miss opportunities. If you're on the sidelines and you're waiting for that, perfect time to try to get in, you actually might miss out on potential gains, because the market can rally unexpectedly and you might be missing out on potentially some positive returns. So you want to take that emotional decision making out of market timing, because I think those two kind of go hand in hand. So emotional investing is the worst, and that goes back to our first principle of having a strategy, which prevents you from panic selling, panic buying in market downturns, or even when there's a hot trend and you're trying to catch it and so forth. So do not time the market. That's my
Don't
second
catch
one.
the falling knife, as it were, right?
That's so good.
Wow, what do you have to say about timing the market?
Well, so I'm gonna have to. So you're saying no gambling? So you're saying no emotional trading? Wait a minute, Paulina. All right. So what's the alternative?
Well, the alternative is, if you're a long-term investor, your work is really cut out for you. You have your strategy, whatever that is, and you stick with it, and you dollar cost average with your investments. And it doesn't matter if the market is down, it doesn't matter if the market is up, because over time you're getting an even investment based off of downturns and upswings. So you don't really have to worry about what the market is doing. You just kind of steady as she goes.
Mm-hmm.
Got it.
So that's advocation for like a monthly 401k where you contribute to something like that and your employer may match it. So that seems like a pretty good plan, especially when you're young, because there's no timing there. You're just naturally in every month, right? Some piece of that paycheck goes into the market. And in terms of dollar cost averaging, it's already built in technically because you're doing it every month, right?
Correct. I would say that also applies to even if you're trying to build out a position in a stock too. Obviously, you're more active in nature. It's not like you're investing in a mutual fund, exchange traded fund, and you're in a set it and forget it mindset. Obviously, when you're investing in stocks, you have to be more active. As Molly said, you need to be up to date on your research, know what the company is doing, how the stock is performing. And we don't want to time the market here, but you want to get in at a time where you see that the stock is undervalued or trading at a discount.
Mm-hmm.
So you're trying to gauge here as to when there's an appropriate time period that you can accumulate more shares. That's not, I would argue that's not timing the market. It's understanding the holistic story of what the stock is telling is performing. There's two different things here, the company and the stock, and then make a calculated decision on when to buy in according to that.
Okay. Molly, are you a timer? Are you a market timer?
Well, I would say that there's a nice little added, there's all sorts of tricks, and the banks fraction their money that they're holding. So why can't we? So if you take a whole life policy out on your life, which is guaranteed we're not making it out of here alive, not to get too much gloom, but then you can borrow against that policy and then use that, and now it's in two places at the same time, and use that very safely with protective puts, and the interest that it incurs you can write off as a business expense being in your trading portfolio. So there's all sorts of really neat tricks that you can not only diversify but fraction and make your bets safe.
Interesting. Okay. I didn't think about that. Very good. The other point, the third tip, Paulina, is start investing early, right?
Yes. Start early if you can. Of course. Sometimes people have to start their investing journey at a later time, which is fine. But again, if you have the right investing strategy, you can have realistic goals and meet those goals. But starting early is the best policy because time in the market is very critical for your investment success.
Sure.
The earlier you start, the more time your money has to grow. And that's through compounding. This principle of compounding is really significant. It's a huge advantage because it helps exponentially grow your wealth over time. So the way to do this is by starting out investing small. Even if you don't necessarily have to have $10,000 to start out. I think that's a huge investing myth that you need to have a large amount to get started. As long as you make consistent contributions over time, especially if you start in your early years, this is going to lead to considerable wealth accumulation by the time you reach retirement age.
Okay. Excuse me. Yeah, I like the investing early, especially if you can do it. I read somewhere, and you probably have some metrics that I want to say it was 10,000, but could have been less. If you invest 10,000 at a year, maybe, no, that wasn't right. Tell you $10,000 a year, after 40 years or something, it grows into $1 million and change, or $1.2 million or some number. I can't remember the exact mathematics, but it was a big progression, right? And I know 40 years is a long time, but at the same time, when you're that age, in your 20s, early 20s, if you can afford to do that, put a little aside each month, I think it's magnificent by the end of the run, right?
Einstein called it the eighth wonder of the world. compounding.
Is that
And
like eights or something like that? Yeah.
is it what?
Every 8 years it doubles or something like that?
No, it's just about
Oh,
the beyond the seventh wonder. There's compound calculations in the ethers, and
right.
that was his go-to. And so, um, the other thing that parents can do is get their kids involved. So my mother actually gave me a choice at 11. Do you want gifts or do you want investments? And so I chose. She's like, okay, pick something. And so I picked Nintendo, which turned out to be a good bet. And then my uncle and grandmother only drink Coca-Cola, so I figured that'd be another good bet. And so I started at a really young age, but kids can get a little feel for it, and money starts to become something different. So it's not your 9 to 5, it's outside of the work you can put in and much more scalable in relation to your time. So I think it's really
Right.
important to get kids involved. Yeah.
Yeah.
I couldn't agree more. I think financial literacy is so important. And if we start teaching kids at a really young age the importance of saving and building wealth over time, they're just going to carry that out into adulthood. And that
Mhm.
leads to so many other good decision-making principles as well. So I couldn't agree more with that.
Yeah. It's almost like the concept of starting on the first hole of 18 holes when you're playing golf and you bet penny and
Right.
it doubles every hole, or maybe it was a dime and it doubles. I have to work out the math, but you start out at such a small amount, and by the 18th hole, it's worth like $1 million or something like that. It's some crazy.
Wow.
And someone says, "I'll play you for a penny and we'll double every hole." It's like it's a joke, right? It's such a big number. So just goes to the power of compounding. I think it is phenomenal. It really, maybe the eighth wonder. I like that, Mal. It's pretty good. So yeah.
There's a really good for kids learning financial literacy. If you on YouTube, if you go to Money as Debt Revised Edition 2009 full movie, it's this incredible. It's literally a cartoon, and I don't think most adults know how the money fractional reserve systems and banking works, and you can
Right.
set kids on that. Kids aren't indoctrinated, so they have their sponge is more free, so you can almost set them loose and they'll have an easier time learning. What was your experience growing up, Paulina? How did you get into your line of work?
So me and my sister, we had work ethic instilled in us at a very young age. Both of my parents are entrepreneurs, and I saw how hard they worked. And in their businesses, my sister and I would help them out in any family related business, and we got paid. And with every month, we would go to the bank. We had my parents, they opened bank accounts for us, and my sister and I would go to the bank and we would deposit our earnings for that month. And it felt like such a sense of accomplishment that we were working hard, we were making money, and it became a fun monthly routine that we did, and that just kept getting us motivated to work and make more money. And then as I got older, we opened our brokerage accounts and we started investing. And of course, when I entered the workforce, I got my 401ks. And then once I started becoming an investing reporter, I really dug into the details around how you build your wealth. And that's when I really started to essentially take it more seriously and build my own investing strategy and outline what my investing goals are.
Mm-hmm.
And it just kind of positively ballooned from there.
Wow.
I love it. And now we know your history. You're Prince of SIBO over here, Lex. So were you started young? Did they start you young?
Yeah, I guess the issue that I had as a young man back then, I started out and didn't make any money because I didn't know what I was doing, so I was a loser. And then once I figured out how to make some money, it came in good buckets full, right? So as a trader, and I know this is not good, my money, once I figured out what I was doing, was best in my trading account in terms of return. People think that's a risky endeavor, but we were on the market making side of the equation. So we were on the professional side of the business. We didn't take very much market risk at all. So we were, the house, as it were, and we got to buy our bid and sell our offer. And we just did that so many times all day long that, you had to be a risk manager, and that was it. Right. So we didn't have a directional bias whatsoever. I didn't have to know market going up, market going down, or anything. I just had to be very disciplined about risk management. So I would say that, my experience was very different because of that dynamic. No, I definitely had investments, but anything I take out of the market was no longer mine. It was something, or out of my trading, it was no longer mine. I put it into an investment manager, and I let that person do what he or she does relative to investment. And a lot of it definitely follows what Paulina is talking about. So I had two little buckets. Probably my bucket was a little bit more high risk to some, but I thought it was the easiest, lowest risk of anything. I don't know if that makes sense.
And I think most people it absolutely does. And I think if anyone has a 401k, if some 401ks offer self-directed brokerages, and you can often trade specific strategies of options in there involving protected puts. So you can look into that and dabble with the savings that because a lot of employees just don't ever look or ask questions. And, I think the next stage of evolution will be more of a financial health involvement. What's your crystal ball vision of the future?
Mine, I don't know. I don't have a crystal ball of the future. I hope you're asking Paulina this one, because I don't know. I don't have a crystal ball.
I don't have one either.
He has a golf ball.
I have a golf ball. That's all I have. That's right. I don't know. I think it, it all falls down to what Paulina just said. I think investing it's important to not time, as Paulina said, and be consistent, right? And be able to always take advantage of that consistency. And I think over the long run and over the long period, you will be very happy with the end result, right? I just think that part of your investment life, financial life, you should be very systematic, be disciplined, and let it, just do it. And you got to pick something that you can handle, right? If you're making a very little bit of money, you can't afford to invest the whole paycheck. You won't be able to buy food and, the necessities. So it's got to be some part of that. And I've heard from young people, I can't afford to invest right now because I'm not making enough money. I totally get that. I understand that. But as soon as you're in a position to be able to start allowing your money to work for you, you gotta force yourself and discipline yourself right away. Right. The first check you should always pay yourself, or always write, is to yourself for investment, right? All the time. So.
And I think until that day comes for people with that fallback, is you can always start now with virtual trading. And Lex always professes that you don't quite learn until you have skin in the game, but it is important to practice now, learn now, and so that when those funds do come in, you're ready to go. Yep. And the other thing about the future is, I think that value trading, we watch politics all over the TV, but I really do think that behind every move, whether it's geopolitics, whether it's, I name anything, there's always a publicly traded company behind that. Mm-hmm. So when you start to value trade, you can actually have a ripple effect on the world and cause change from your laptop in conjunction with all of your buddies who share the same beliefs, whichever way they sway. And so I think that might be the future going forward.
Yep, makes sense. You hope. I love it. So here's the numbers. Ready? I just did it on the computer. Okay. It's $100,000 investment. $100,000 investment. So in 32 years, that grows to, doubling every 8, let's say. That grows to 3.2 million. So, but
if you invest how much?
100,000 from the time you can invest 100,000, 32 years forward, roughly, $1.6 million. That's pretty good. I mean, yeah, that's insane, right? So, and you think, a young kid probably doesn't have 100,000, but you can work off of that any way you want, right? So.
And I think there's if you were to Bard, if you took your coffee daily investment in your morning coffee and you were to sock that away in the compounding
Right.
nature of life, it's mind blowing. So you never look at your coffee again. I think that's the trick. And that just goes more to education, and compounding is really the eighth wonder of
Right.
the world. It's
Right.
incredible.
No, I agree. Okay. Well, great, Paulina. Thanks for coming on. We always love when you come visit us on Friday. It makes me so happy because
Thank you for
that
having me.
means two things: that you're here
Paulina.
and tomorrow's the weekend. That's always good too,
Yeah,
right?
that's right.
I know you guys are trying to be serious with me. I get it. You're trying to make me feel good.
I'm
Okay,
serious.
fine. Paulina's got to run, but Paulina, thanks again. We will see you next
Thanks,
week.
Paulina.
You have
Thank you.
a
I'll see you
great
next week.
weekend, and stay safe and happy trading, right?
Sounds
Awesome.
good. Have a good one.
All right. Bye now.
Bye.
Bye-bye.
See ya. Hello, Mal. Here
Hello,
we
Lex.
are.
Hey, and always remember to subscribe. And if there's ever a topic you want us to talk about, write it down in the comments, and we
That's right.
will
That's right.
attack it
Subscribe
for
to
you.
the YouTube channel is Options Brew TV. The show is The Brew, Wednesday, Thursday, Friday, 9 a.m. Central, every one of those days. Yeah, and make sure you send us some comments. Apparently, I'm on TikTok now. I got a little thumbs up there. I'm on TikTok now
All right.
under Pro Trader Lex. I'm going to do another video today on
Okay.
win calls or early exercises. So try to find that one
Stay
on
tuned.
TikTok. Yeah, stay tuned.
All right.
All right,
Okay.
Mal. I'll see you next week. You have a good
Thanks,
weekend
Lex.
too, okay?
You too.
Bye.
Bye.
All right.